it's Katya and welcome to my mortgage channel. Today we are talking about FHA loans. When we say FHA loans, the first thing that comes to mind is Federal Housing Administration because this is the authority that backs the loan. When we say the loan is backed by FHA, that means that there's a mortgage insurance in place that is protecting the lender, not the consumer, but the lender from possible default on consumer side. When talking about mortgages, I usually like to do it in a pros and cons format. So let's start with the pros. First of all, the best part of FHA is a very low FICO score requirements. For example, you can buy a home with your credit score being as low as 500. You will have to put at least 10% down payment depending on the lender's requirements, but it is doable and it is possible. And if your credit score is at least 580, all you have to do is 3.5% down. You will have a mortgage insurance for the life of the loan, but it's a great option to start with. Now, the second thing about FHA that I do really like, it's a low down payment requirements. As I mentioned before, as long as you have a credit score of at least 580, you are good to go with a down payment as low as 3.5%. And that is a great option because if your purchase price is $100,000, the only thing that you will have to put down is $3,500. Another cool thing about FHA loans is gift funds. You can be gifted up to 100% of the funds needed towards your closing costs and your down payment by any of your relatives. So let's say if you do not have anything saved up, you can ask someone to gift you those funds that will be used towards your closing costs or to down payments. Unfortunately, none of those funds can be used towards your reserves. You will have to have reserves in your account that are required by the lender. There is another cool thing about FHA, and it's multifamily purchase. Not a lot of people know that you can purchase a multifamily unit, and the coolest part about it, that the future rent proceeds that you will be receiving can be counted towards your income in pre-qualification process. There are a few requirements. You will have to have at least 3.5% down payment. You will have to live in a unit for at least 1 year as the owner yourself. And the even cooler part about it, if you think about it, you can live in this property mortgage free based on the rents that you will be receiving from your tenants. Another cool part about FHA, it's seller's contribution to your closing costs. You can get up to 6% of a sales price of the home given to you by the seller towards your closing costs. That can be used towards your mortgage insurance, origination costs, lender insurance, discount points, prepaids, anything that has to do with the closing process. And finally, one of the coolest parts that FHA has to offer is streamlined refinance. You can refinance your existing FHA mortgage with no appraisal required, no income verification, no prepayment penalty, no additional down payment unless you desire to put some additional funds down. The only things that you will have to provide your lender with is your employment verification and your updated credit information. That's all you need. The process is fast and easy, and it can take up to 2 weeks, sometimes even less. Now let's talk about not a good part of an FHA loans. First of all, FHA loans have its limit. So you can get a limit up to 65% of the confirming a loan limit in your county. Every single county's limit is different. So you have to go to your county's website and check it out to make sure that you are counting on a correct loan and a correct loan amount. Your loan officer will be able to help you that, but just to prep yourself for it, go and check it out. Second thing, what I do not like about FHA is mortgage insurance. Mortgage insurance and an FHA loan stays with you for the life of the loan. So it doesn't matter, you will be paying off your mortgage for 10 years, 15 years, 30 years, your mortgage insurance will be there with you. The only way for you to get rid of it is when you reach 20% of equity in your home, you will be able to refinance and get yourself a conventional loan. But your credit score will have to be at least 620. There's also such a thing called upfront mortgage insurance. There is an FHA mortgage insurance that you will have to pay no matter what. It's not a part of mortgage insurance premium that FHA has. This is a completely different thing. It's called upfront mortgage insurance. So make sure that you look at on the settlement statement at your closing and you differentiate them properly, and you would know that mortgage insurance premium and upfront mortgage insurance, it's two completely different things, and you will have to pay them. Another downside of FHA loans, it's limitation to a primary residence only. You cannot have two FHA loans at the same time. So for example, if you bought something a few years ago and you already have an FHA loan and now you're looking to buy something else, you cannot have an FHA loan unless the first FHA loan is closed. So you cannot rent the first property out and buy a second property with an FHA loan. You will have to either refinance a first property or sell a first property in order for you to get an FHA loan on the second property. It's a downside, but this is the way the program is designed. Another thing about FHA is that some of the areas may not be approved by FHA. So you will have to go to Federal Housing Administration website and check out the zip codes or the addresses that you are potentially looking to buy and get an FHA mortgage, and make sure that they are FHA approved. Because, for example, some of the condos that have a high HOA, they may not be approved by FHA. So make sure to check it out before you decide to get an FHA mortgage. And finally, the last thing about FHA, last thing of cons about FHA is you will have to pay upfront mortgage insurance premium every single time you refinance from FHA to FHA, meaning that every single time you do a streamlined refinance, you will have to pay mortgage insurance premium. If you refinance from FHA to conventional, you would eliminate mortgage insurance. You would not have to pay mortgage insurance, upfront mortgage insurance premium, but you will have to pay upfront mortgage insurance premium every single time you do streamlined refinance. So to sum up, an FHA loan is a great option for someone whose credit score is not that high, or for someone who doesn't have enough funds for closing costs or for a down payment, or both. This is a great option to start with for those people. Now, you can buy now, for example, and then either refinance in a few years or build some equity and sell it. Any way you do it, you will be in profit in the long run. You will have housing history. The banks potentially will be looking at you with more trust because you already had your first mortgage, and it will be easier for you to get your next mortgage. Think about it. Thank you so much for taking time to watch my videos. If you liked it, please click thumbs up and subscribe so next time my video comes out, you will be notified. If you have any questions, please comment below and I'll be more than happy to answer those for you. Thanks again for your time and have a great day.